Hello, everyone, and welcome. This is the Art of TradeStation platform, and we go over some functionality of TradeStation to make sure that you guys are using TradeStation to the maximum potential. And today, we are going to talk about futures trading utilities. Even if you're not a futures trader, it's great to know about other asset classes and understand the mechanics of trading a particular instrument. And that's what we're going to talk about today. And if you are a futures trader, then the tools that we're going to highlight and the indicators we're going to showcase today are going to help you in placing trades and be aware of all the information around trading commodities. My name is Jesus Nava. I'm the Director of Client Training and Education right here for TradeStation Securities. And for me, it's a pleasure to be here talking about TradeStation. And I'm excited about presenting these tools to you, and I hope that everyone can benefit from the information. Let's go ahead and take a look at some of the disclosures of this presentation. Keep in mind that every symbol and idea that we talk about is for educational purposes only. It is not a recommendation of TradeStation. Also, that active trading is not suitable for everyone. There are products that have more risk, like options and futures that are leveraged products, and we need to be aware of the risks when trading these products. Also, past historical performance is no guarantee of future results. We need to be aware of this. For additional information on these disclosures, there is a link in blue right there on this PowerPoint slide, www.tradestation.com/important-information for anybody that would like to read more about these details. But before we jump over to explaining some of these futures trading utilities, let me tell you a little bit about what we're doing at youcantrade.com. TradeStation Securities is the host of two different channels. One of the channels is Getting Started with TradeStation, which is completely free, and we do live sessions every single week. If you haven't attended one of these sessions, I encourage everyone to go to youcantrade.com. You can register for a free membership and get access to the Getting Started classes that we do every week. We also have a Q&A, which is open and excellent for anybody that is getting started with TradeStation. You sometimes have questions about how to do certain things. You have questions about certain functionality. And these are great opportunities for you to ask those questions to somebody that is an expert on the platform. And in addition to the Getting Started, we also have another channel called the TradeStation Masterclass. It's a premium channel. This channel offers, deep dives on the TradeStation technology. It also provides you different strategy elements and ideas that trigger, some interest on how you can approach the markets. We also talk about technical analysis. In some of the sessions, we even show you how to program easy language to customize indicators and strategies. Every session is archived, so you have an on-demand library of videos, multiple opportunities to ask TradeStation experts about technology. And every so often, we do have special guest events that are exclusive to the Masterclass membership. So if you haven't had a chance to look at the content that is there, again, I encourage all of you to go to You Can Trade and take a look at the Masterclass where we do live sessions every single day. All right, let's go ahead and get started. Let's talk about futures trading utilities and what is available right now on TradeStation. In fact, before jumping over to TradeStation, I wanted to highlight this futures promo where you get 50% off on brokerage fees forever. It's a promotion that we haven't done before, so it's a great opportunity for you to open up a futures account and take advantage of the functionality there. Let's go ahead and get started. This class is divided in four main sections, all related to futures trading. The first thing we're going to talk about is reducing trading errors. And what that implies is that we're going to need all the information related to a commodity to make sure that we are making an informed trading decision. There's no surprises. You want to make sure that you're aware of how these futures that you're trading behave and what a particular movement represents. So I'll show you some tools that are custom and that I'll make available for everyone here in class. When we talked about measuring price moves, is something that, yes, Every futures trader should understand what a price move represents. Every commodity has a different valuation, and every point movement represents something different, like a different dollar amount. So being aware of what that movement is in dollars is crucial for anybody that's trading futures. That way, there's no surprises. Like, I'll give you a clear example, crude oil. Every time crude oil moves 1 point, that's $1,000. So in a chart, it may just seem like it just went up $1, but in reality, the futures contract gives you control over 1,000 barrels of crude oil. So it exponentially provides you a different movement. A 1 point movement equals $1,000. Every futures is different. I'm going to show you a few things that you can, or a few resources that tell you exactly what that movement is per commodity. The bid-ask spread is something that you should also be aware of, because that could translate into a cost of trading, especially if you're using market orders or stop market orders, because hitting that bid and ask, of course, is going to be a transactional cost. So we'll go into more detail about that. And the last section of this presentation, we'll take a look at volatility and how we can value that volatility and compare one commodity to the next. Because even if two commodities have exactly the same movement, that movement, as we said previously, can translate into a different amount because of how the futures contract is valued. So those are the four main points that we're going to talk about. And there are custom tools or custom indicators that will fit each one of these 4 points. Let's get started with reducing trading errors. And for this presentation, before I even continue on, let me share some of those custom tools that we're going to talk about today. That way you can start downloading and using the indicator. So that link that I just shared with everyone, it's a zip folder, and the zip folder contains one file that is an ELD. An ELD is an easy language document, and it gives you access to all these custom tools. If you're not familiar with ELDs, what you need to do is you need to download and save the file to your local computer. You can put it on your documents, on your desktops, wherever you want to put it. And with the TradeStation platform open, just double click on that file wherever it is, and this will launch what's called an import wizard, allowing you to import the tools into TradeStation. There are 7 total indicators that you're going to add to your TradeStation. And the nice thing is that the name of those indicators will start with an @ symbol, like an ampersand, Art TS, Art of TradeStation. So as long as you remember that these tools came from Art of TradeStation, just look for that prefix and all those studies will be grouped together. All right. Inside of that zip folder, there's going to be an indicator that provides you information on futures, which allows you to reduce trading errors when trading them. The first thing that we're going to highlight is the dollar risk to trade. You know, what is it that you're risking? What is the value for every point movement? Because of course, I mean, that could be potentially a profit, but it could also be a loss. So there's a risk associated with how these symbols will move. And it's important that if you're going to be trading futures, you know what that risk is. Also, these futures contracts have a very specific lifespan. They have an expiration date. So we have month codes that you need to be aware of. And this comes it is very important because you want to be trading the futures contract that has the most liquidity, the one that is the front month. You don't want to be stuck into it or stuck in a trade that does not have enough liquidity because of trading something that you didn't intend to trade. So always be aware of the expirations and the month codes, because that'll tell you specifically if you're making the trade on the symbol or the right symbol. Also, be aware of expiration dates and first notice dates. These are all different depending on the commodity you're trading. session start and end times, depending on the commodity you're trading, cotton, sugar, cocoa, all these commodities, they have different begin time and end time. So be aware of that, because you may be wanting to put in a trade when the markets are closed. This information is important. Or maybe you don't want to keep let's say a commodity position open overnight because of margin. Maybe you're taking advantage of the day trade rate and you don't want to leave it open overnight, because then the initial margin kicks in. If that is the case, then you want to be aware of the end time, so you're not putting in a trade when the markets are going to close. And if the markets close, of course, that would be considered an overnight trade, and then full margin applies. So things like that, be aware of all the information necessary of the commodity you're trading, so that there's no errors made. Margin rates is important. You need to be aware of how much is it going to cost you to put on a trade. Is there a day trade rate? What is that? How does that translate into my account balance? Am I able to trade that futures based on its margin? So very important information. And in addition to that, of course, you want to take a look at price, volume, and open interest patterns. I alluded to this earlier when I said you want to make sure that, or sometimes, it depends on what strategy you're trying to go with, but most of the time, you're going to be wanting to trade the front month, the one that has the most volume, the one that has the most open interest, unless you're interested in a far ahead expiration, which is totally acceptable. But if you're looking for the futures or the commodities that have the most liquidity, or the ones where the bid-ask spread is the tightest, then you need to be aware of open interest and be aware of volume. All that information that you see here, all these bullet points, are all combined into one custom indicator that you see right here at the bottom of the screen at ARTTS, which is Art of TradeStation Futures Info for CH. CH just means that it's designed for charting. Some of these indicators are designed for charting. Some of them are designed for radar screen. The letters at the very end of the name tell you what the indicator is designed for. So use it in that application, which makes sense to use in that application. And something else that I wanted to show you. I am going to share with you the PDF that I have here on the screen. So in case you need something to reference, here's this PowerPoint converted into a PDF, which is that last link that I just shared with everyone here. All right. Actually, yes, very true. Thank you for pointing that out. And I just noticed when I looked over here at my website that I shared the wrong zip. And we'll talk about that zip too, because I did want to share it with you, but I didn't provide it the right context. The first zip that I sent you is a custom symbol list zip. And I'll show you how you can use it, because I thought that everyone here would benefit from having a list of futures. I know there's a default futures workspace that you can open up inside of TradeStation. It's kind of older, so it doesn't have all the different futures or commodities that are rather new. So I created a whole series of custom symbol lists that you can import into your TradeStation platform. So let me share the ELD with you this time. I'm going to send the correct zip folder. All right, that's another zip folder. So what you're getting today, you're getting two zip folders, one with custom symbol lists, the other with the ELD, and a PDF, which I just shared right here in the screen. All right. Let's go ahead and take a look at this chart study and some of the things we can do with it. So let's go back here to TradeStation. Let me show you how you can access these custom symbol lists, but I'll do that when we go over to radar screen. So let's concentrate on charting, which is this indicator that I just shared with everyone. I'm going to go to apps and I'm going to click on chart analysis. I did not provide a list of workspaces because I think that you should have the ability to just open up a workspace and just add the indicator yourself. So you practice that process and it just reinforces the use of these custom utilities. So I'm just going to open up a chart. I'm going to pull up crude oil. and I'm going to use the continuous contract. And I'm going to change the chart to a daily time frame. All right, so this is crude oil right now trading at, let me put on my glasses, trading at $112.99. All right, this gives you control over 1,000 barrels of crude oil. Let's take a look at futures info, but using the symbol. By the way, let me just open up. All right, so everybody should have gotten this top zip folder. It's called ARTTS. That just means Art of TradeStation Futures Trader Tools. When I double click here, this is all you see. This is an easy language document file. If you have extensions visible, which I don't, the file would end in .eld. Mine doesn't, but it's still an easy language document file. So what I meant when I said download the file, put it on your computer, this is already in my computer. What I do is I double click on it once it is saved to my computer. And since I already have my TradeStation opened in the background, you're going to see what happens. I just double click on the ELD and notice how it launches the import wizard. And it tells me that there's functions and indicators in there. I'm going to click next. These are the 7 indicators that we're going to discuss today. 1, 2, 3, 4, 5, 6, 7. The 2 at the very bottom are just functions, so they don't really work as indicators, so we don't count those. So the top 7 are the ones we're going to highlight today. And then we just click finish. I'm going to say yes to all because I already had them in my TradeStation. And once it finishes the process of importing, I just have to come over here and click on finish. Once I do that, those indicators that I shared with everyone are part of your TradeStation platform. And all I need to do is come over here to studies, add study, the same way that you do for the built-in studies of TradeStation, and look for the @ symbol. They're going to be probably sorted towards the top of the list. ARTTS. Those are the indicators we're showing today. Let's go and use this one, which is the futures info for CH, which is charting. Let me click OK. And that loads right here onto your screen. I have this come up by default, but I'm just going to use it the way that it comes. So no changes made. All right. Let's see what this indicator is saying. Notice that when you pull up this indicator, it provides you a futures info bar on the right-hand side. I know that many people had used this version of the indicator back in the days. And if you're getting an error, when you load up this particular tool, it's probably because there's an older file inside of the TradeStation directory that is conflicting with it. Let me show you how to fix that. And I wanted to say this in this webinar so that it gets recorded and anybody that is watching can say, well, I'm getting an error when I put this indicator on my screen. How do I fix it? Well, let's go over here to the Windows Explorer. I'm going to go to my documents and open up TradeStation 10. Everybody should have a TradeStation 10 folder inside of documents. And once you go in there, I'm going to go to easy language. I'm going to double click on work area. And the file that I'm looking for is this one called futures margin. Futures margin is a file that does not exist in the TradeStation directory by default. It's actually created by inserting the study on the chart. So you can see that it's 2:20 p.m. in the afternoon. You can see the date and the time that this file was modified as soon as I loaded the indicator. So I see a question here, does it update the margins regularly? It updates the margins as you load the indicator again. So always be aware of that because what the indicator is doing is actually pulling up the margins from our website. So if you want to make sure that you're using the margins reflected on the website, make sure that this file is there and that you're loading the indicator in charting because it refreshes it. And for anybody that's getting an error when loading the study, delete the futures margin TA. Just delete it. That's an XML file. It gets recreated when you put the indicator back in the chart. But if you're getting an error, it's probably because this file became outdated and the indicator is unable to rewrite it. So delete it and then add the indicator again on the chart, it should automatically recreate it. So here in my TradeStation, I have the indicator in place. Let's talk about the information that is here. I did say that the indicator scrapes the information from our website. Let me show you what that website looks like. This is the futures margin rates that are available in TradeStation. In fact, if anybody here can access them, just go to TradeStation.com. If you hover over pricing, you're going to see the option to access futures margin rates. And this is the page right here. It just gets updated regularly, and it provides what the initial margin is for each one of the commodities you can trade within the TradeStation platform. And what the indicator is doing is pretty much going online, looking at the website, and scraping the information right off from here. So as long as this information is current, and as long as you update or reload the indicator, you should be fine. If I come over here, let me show you something really interesting. I have the chart open. It's been a few minutes since I updated the document, reloaded, it's been just a few minutes since I loaded the study. You can see that the modified date and time is 2:20, and it's already 2:25. So if I come over here to the chart and I reload it, I'm going to do Control-R to reload it. This will recalculate, and it'll load my futures info one more time. If I go back to that file, take a look at the modified time. Now it has a time of 2:25. So the reload allows you to refresh the indicator and make sure that it's looking at the page and getting the information or the margin requirements that are updated. Okay? Let's take a look at the indicator itself. Sorry for making it confusing, Joe. I just wanted to provide you guys with enough information so that I cover all the bases. So if anybody's getting an error, they know exactly what to do. And yes, this session is going to be recorded, so it allows you to go back, pause it, and make sure that you're doing exactly or following the instructions that I'm providing you. So I'm sorry about that. Let's take a look at the information that's here, because I find this futures info bar on the right-hand side very beneficial for futures traders, because it provides you all the information related to the futures contract. You don't have to go to the website. You don't have to go to the properties of the symbol. You don't have to search in Google. Everything is here. Starting right here at the very top, you get the point value. Well, the very top says contract multiplier. This is just a way for you to calculate the values based on a multi-contract position. Most traders, they place a position with one contract, but if you want to trade 2 or 3 contracts, you can just use the contract multiplier so that the values that you're seeing are reflective of that position size. The point value is 1,000. What does that mean? It means that every time that there's $1 movement for crude oil, that represents $1,000. How do we get this information? Well, that's a property of the symbol. If I go to data and I go to edit the symbol, inside the properties, this is called big point value. That's where that information comes from. And it's just the nature of the commodity. For anybody that has traded crude oil, you know that this particular contract, even though it's priced per barrel, it is actually controlling 1,000 barrels of crude oil. So every time there's a 1-point movement, that represents $1,000 in your account. You also have information about the minimum movement. The minimum movement for crude oil is 1 penny. And you can see that reflected in the price. You can see that it goes from 112.42 to 112.41. So the movement is in 1 penny increments. Every time that the commodity moves by 1 penny, that represents $10 in your account. It also gives you that resolution so you can understand every time there's a tick, that is $10 in my account. All right. And one interesting calculation that this futures info bar provides you is an average bar value. This is a value of $7,424. Where does this come from, and how does it relate to the commodity that we're looking at? This average bar value is using a calculation that we probably all know. It's called the ATR. It's an average true range. And what it's looking at is how big the candles are from high to low. It's an average range bar. But not only that, but it's also multiplying that value by what the big point value is, what the point value is over here, so that you can get that movement in a dollar amount. So what this means technically is that in the past 30 days, crude oil has moved an average of $7,000 per bar. That's huge. That's a big movement. I mean, considering the volatility that crude oil is going through because of the war in Ukraine, it's very understandable that the risk is huge in trading crude oil, because in average, we're talking about a move of $7,000 per bar. I have a daily bar, so that would be a daily bar. That calculation that you see there, the 7,424, of course, it's based on the time frame that I'm looking at. If you're an intra-day trader for futures and you're looking at resolutions that are a little bit smaller, let's say a 5-minute, I'm going to change the chart here to a 5-minute interval. And now take a look at the average bar value. Since every bar now it's different, every bar represents 5 minutes instead of a day, you can see that the average bar value for the past 30 bars is 437. I mean, the movement on a per day basis is still there. It's still $7,000 per day. But if we're doing short trades on a 5-minute chart or in a 5-minute span, then just be aware that the movement or the average bar movement is $437 every 5 minutes. Still a significant risk, but you can see that the value is calculated based off the time frame. Everything else, the point value, the minimum move and minimum move for points, remains the same. It's exactly the same whether you're on a daily or a 5-minute, but the ATR, of course, changes. The next bar over, where you see the green, it tells you information about the session. Every futures trader needs to know when the market opens and when the market closes. So don't go trading a commodity that you're not sure if it's open or not, because that's going to lead to trading errors. Be aware of it. And it's nice that this futures info trading bar lets us know when the market opened and when the market closed. This is local time, by the way. If I look at the actual session, by the way, this is this is crude oil with trades in the NYMEX, New York Mercantile Exchange, which is Eastern time. This computer is on Eastern time too, so the times are going to match. But it does give you an indication of where the market is in regards to opening and closing. And the color will change. There's a few colors here that, as long as you see it green, the market's open. Yeah, it's going to close at 5 p.m. today, but we're still inside the session, and we're about 2.5 hours before the time closes. But as the time approaches the closing time, this green will turn pink to let you know that, hey, watch out, because the end of the session is approaching. And if you don't want to keep any positions open, just be aware that we're about to close. When it's red, it's because we're within 5 minutes of closing. And then it turns gray if the session's already closed. So this is a nice indicator for you to know if the market's open, if it's closed, if it's about to close. So very interesting and nice information there. You also see an exchange. So I said before, this is traded in the New York Mercantile Exchange, and you have all the contract months. Let me open this up a little bit. If you don't see all the information, the divider here, you can bring it and resize it. So sometimes, the futures info loads like this and the information's cut out, but just hover over the edge and it gives you the ability to extend and make that bar wider. So you have all the contract months here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, meaning that there is a monthly contract that you can trade for crude oil. So it has all the months. And that's important to know, because there are some commodities that they don't have every expiration, like some index futures, if you're trading the S&P 500 or the E-mini S&P 500, those only have 4 expirations. So be aware of the month codes. Be aware of what you're trading, and if what you're trading is what you really want to trade. Here's the margin rate. So this also scrapes information from the website. It tells me that the initial is 13,200. Here's my maintenance margin, and here's the day trade. Now, this is something that I didn't ask the trade desk. I meant to ask the trade desk this morning, but my day trade rate is usually less than the initial. I'm not sure why it's represented this way. I'm sure it's because of all the volatility that's been happening on crude oil since the war with Ukraine started. But here the day trade is 200%, meaning that if you're trading it throughout the day, your margin is 26,400, double of the initial. Why is it represented this way? I'm not sure. This is a question for the trade desk. Under normal circumstances where we don't have a war going on, the day trade is usually less than the initial, but I think that's the reason why it's reflected this way. But this is like that on the website. If anybody's trading crude oil, I would suggest that you call the trade desk and find out why the day trade is double what the initial is. Unless somebody here knows. It gives you the last update, so you know when was this information loaded. It has a time of 2:30. Last trading dates. This is interesting because it gives you information about the first notice date, and it also gives you the last traded dates. That's what the acronyms here stand for. FND, first notice date, and LTD, last traded day. There's 3 variations of that. In fact, there's 4. Four pieces of information about what the front month is and what you have on the screen. The first 2 is what is included in the chart. You can see that right here. My chart is set to @CL, which is a continuous symbol. Continuous symbols always are reflective of the front month. If you look right here at the top on my chart analysis toolbar, you can see that it says May 22. So this is the contract for May 2022, which is the one that is reflected on the chart. That's the top 2 lines of information are for the May contract, where the first notice date is April 22nd, and the last traded date is April 20th. But it also gives you information about the front month. Now, the front month, as you can see here, matches the symbol that I have on the screen. Why is that? Because it is technically the front month. No questions about that. But if it wasn't, it would be different. Let's say, for example, this is CLK22. The prior month was CLJ22. So let me go here to CLJ22. I'm just going to load it up right here on the screen. So this is CLJ22. Take a look at that CLJ22. Now it's reflected here on the chart. It's just pretty much telling you that's the symbol you have on the chart. The front month, notice how it's different now. It's telling you that the front month is CLK22. So now there's a discrepancy here because the green is always going to tell you what the front month is. And that's based on volume and is based on open interest. And the pink here is going to tell you what the current month is. Current means that it's a futures contract that hasn't expired, that is current because it's based on the current date, but it's not the front month. That's why it's colored in a pinkish color, because it's just giving you that as a piece of information. Hey, there's a front month, which is right here in the green. So what matters the most here, I think, is what's included inside of the green, because that's always going to tell you what the front month is. The last 2 rows of information right here tells you what the following month is after the front month. So after CLK22 rolls over, it'll go to CLM22, which is the next month. Okay, hopefully this is not too much information or too confusing. But if I had to simplify this a little bit, what I want to see is what's inside of the green, because that's always the front month. Now, how is the front month decided? Based on volume. Take a look at the two tabs that you have right here on the top of the screen, futures info and futures chain. In the futures chain, you can see a sequence of expirations and their volume, what their volume was yesterday and what their volume is today. So this is current volume today and previous volume yesterday. And you can see the open interest. So you can see that out of the 4 contracts, the one that has the most open interest and the most volume is the second row, which is CLK22. Okay, so CLK22 is the front month if you wanted to trade something with the highest liquidity. All right. Whew. That was a lot of information, right? Let's go over to the next indicator. I think I used too much of the time of this presentation for just that simple one, but let's see what the next indicator shows us. Measuring price movement potential. Important. We need to make sure that we know what that represents in dollars. And each futures market has a unique point value. We already talked about it, right? Futures info, the one in charting, tells us what every point, is valued at. So we need to calculate and display the dollar value of a price level to the current price. And this is a very interesting tool. I'm just going to show it to you right now, but it gives you the ability to also adjust the trade size and measure the dollar price potential of a price range. Sometimes you're looking at a chart and you say, well, I want to set a profit target on this level because for whatever reason, you say, this seems like it's a very nice resistance level. It's traded there before, so you have expectations for the price to reach that level, but you want to know what that level represents in dollars. Sometimes when you're trading stocks, it's easier because for every dollar movement, you get a dollar value in your account times, of course, the number of shares. But for commodities, since every commodity is different, one movement can represent a total different thing. So let's go ahead and talk about this other study, which is called RTS Levels Calc. Let me go here to my chart. I'm going to come over here and go to studies, add studies. It's called RTS Levels Calc CH. We're charting. I'm not going to change anything. I'm just going to click OK. And this is what it looks like. This is calculated from the last traded price. Let me go here to the front month. I'm going to go to @CL just to use the continuous contract. Sometimes if you see just one line, it's because the scale does not adjust to show the other one. But if you squeeze the chart a little bit, you see both of the lines. These lines you can click and drag and see what the potential movement is. Let's suppose that I'm looking at the price activity of crude oil right here. And I say, well, what if I wait until crude oil reaches this level that it traded at, just about 20 minutes ago? Was it 20 minutes ago? Maybe more than that, maybe almost an hour ago. Okay, that's fine. But I want to use that as a target. So if I grab the line and I put it somewhere up here, let's do 113.50. There we go. From the last traded price of 111.24, if it goes to 113.5, that's a movement that represents $2,260. Why? Because every point we already established, as it says right here in the futures info, is $1,000. And we're talking about over 2 points movement. Does that make sense? So this tool will allow you to measure the distance either to the upside or the downside. So if you want to calculate, the movement, let's say, for example, we want to say, what would be if we had entered, at 111 and the price drops to 110. Let me drop this to 110. How much would that be? Here you can see that it's $1,100 in losses. Of course, this is calculated from the last traded price, and that is the reason why these values recalculate. But let's say that you had an open position. Let me go here to ES M22. And what I'm going to do is I'm going to enable my account orders and positions. Do I have a position here? I do. Okay. So notice that, again, these two lines are calculated from the last traded price. It provides you a difference between the two lines from one to the other and what that movement is. But if I wanted to calculate this from my position, take a look at that. I have two contracts of the S&P E-mini. I can double click on this study. Yes, to customize the study. And right here, it says use position price. I'm going to set that to true so that it uses the position price. It doesn't grab the position price automatically. So I need to enter what my position price is. I know what my position price is. It's $4,469.75. I'm going to put that in here, 4,469.75. And the trade size for my position is 2 contracts. There we go. I click OK. And now these values are calculated from that entry price. So if I wanted to trade or do a profit target at this level that was touched twice intraday, let's see what that represents. And if I wanted to set a stop loss, let's say that maybe I want to set a stop loss right here where the market has been, maybe somewhere here. You can see what those calculated values are. So my profit target would be about $2,700 and my stop loss would be about $825 because now I'm calculating those values based off my entry price of $44.69. Very valuable, right? And this is the type of tool, these levels for charting is something that is that you can use on other assets. So if you're a stock trader, you can also put it on stocks and it does the exact same calculation. All right, let's go over to our next study. Bid-ask spread reporting. Know that a bid-ask spread for the cost of a market order. So display the bid-ask spread in minimum moves. Visual alert that the bid-ask spread is greater than some number of minimum moves. You know, most of the futures contracts, when they're actively traded, the spread is going to be 1 or 2 ticks, no more than that. But when you look at expirations that are further out or commodities that are not as traded as others, then you start seeing a wider spread. And it's interesting to keep track of that spread because, of course, it can turn into a transactional cost, especially if we're using market orders or stop market orders. So we do calculate the dollar value of the bid-ask spread because, of course, this is going to be a cost for you. Let's look at this indicator, which is designed for radar screen, and it gives you the bid-ask spread in dollars. Let me go over here to my TradeStation. And this is where those custom symbol lists are going to come very handy. I'm going to open up my radar screen. The contents of the zip folder for the custom symbol list. Let me go ahead and open up that here so you can see it. I'm going to go to, again, my TradeStation 10. But this time, I'm going to open up the folder for custom symbol lists. This is where I have that zip folder. Let's say that you open up the zip folder, and this is what you find in there. These are custom symbol lists. What I would do is I would select them all, right-click, copy, and then go inside of the folder of custom symbol lists and drop them in there. We don't have any symbol lists for futures, so this is going to help you insert futures or commodities from a symbol list. I have one that just says futures. Where is it? Yeah, there's one that says just futures. That includes all the commodities that TradeStation supports. Not all of them. There are some that are not traded, and there are some that don't have a continuous symbol. I just selected the ones that have a continuous symbol or that support a continuous symbol and that have some trading activity. A lot of them are giving you like invalid symbol or something to that effect. But once you have the custom symbol lists in here, you can go to TradeStation and do what I'm about to do, which is data, add a symbol list, go to other symbol lists, open up my custom symbol lists, and this is where I see all my futures by category. You have, indexes, the energies, and so forth. If you just select futures and click OK, it'll add all the futures that are part of that page. And you have a description here that you can add just in case you don't recall what a particular symbol represents. Okay, so these are all my symbols. I'm going to change all the symbols to daily though. And let me add that indicator that we're talking about, the bid-ask spread. That indicator is called bid-ask spread $RS. I'm going to add it, and let's put it right here. I'm going to move it up. I'm going to put it next to the last. So it's right here in the middle of the screen. All right, that calculates. Notice that the indicator has two columns. The first one gives you the actual spread. When you see a 1, it just means that there's one tick between the bid and the ask. That's all it means. So if you have 2, of course, it's a wider spread. There's 2 minimum movements in between. What the indicator does by default is that it's going to give you a color magenta for anything that is 3 or higher. So those are the ones that have the bigger spread. But it also tells you what that spread translates into a dollar amount. And all these columns can be sorted. For example, if I wanted to sort by the actual spread, if I double click on the column header, notice that, well, 0, of course, is for things that are not traded. There's no bid and ask. So that's why it's at 0. But if you see a 1, it's because it's a very tight spread, and it tells you, what that represents in dollar amount. You can do it also for the dollar value. And you can see that some of the commodities here have a quite wide spread. Here we have E-mini heating oil, because when you get things like this, it's probably because there's no volume, there's no activity. And of course, the bid and ask spread is out of this world. So those are anomalies that you probably have to ignore because there's no trading volume. But once there's trading volume, for example, this one right here that says feeder cattle, we still have 66 minimum price increments between the bid and the ask, which is a transactional cost of 825. What does that mean? That if you were to buy, you're going to buy at the asking price, and if you were to sell, you're going to sell at the bid price. That difference it represents a cost to you of $825 based on the value of the commodity. So interesting indicator. It provides you the spreads for all the futures. Let me go ahead and sort by symbol. And you can see anything that is highlighted in magenta, of course, has a wider spread than 3 minimum movements. Volatility valuation. What is this? It's a dollar value of the volatility for a futures contract. What we talked about in our example earlier, a movement in one commodity represents a different dollar value. There's ways in which we can measure this, and this indicator measures volatility in 2 different ways. First, average true range. Very simple form of volatility, but it gives you an understanding on how the prices are moving historically, in this case 20 bars, and how they're moving, how far up and down these bars are getting, the difference between the high and the low. But it can also be calculated as a channel. Now, if you look at the 20 bars, and instead of averaging, the range, you look at the highest high and the lowest low. So you create a channel. And that is also a way of looking at how far up and how far down the price of the commodity has been. Not only how far and how far the price has been, but what does that represent in dollars? We'll look at our next study, which is Art of TradeStation, the dollar range. Let's take a look. I'm going to continue using radar screen because these indicators were specifically designed for radar screen. I'm going to click on the plus here. And the two, actually, let's look at the one that we just mentioned, which is right here, RTS dollar range. I'm going to add it, and I'm going to put it right next to my bid-ask spread. All right. You see it also has two columns because you see the two different forms of volatility measurement. One is an ATR and is clearly labeled as an ATR, and the other is a channel. Both of these calculations are looking at 20 historical bars. And of course, set to a daily. Make sure that we always keep an eye on daily or the interval, because that's what's going to determine, these valuations. If you go to an intraday, the values, of course, are going to be smaller. But what is this telling you? Well, if I look at something that, let's look at crude oil. Crude oil is right here. Take a look at the channel and take a look at the ATR. What does that mean? Well, if we look at the last 20 bars of crude oil, 20 historical bars, these are 20 trading days, and we look at the highest high and the lowest low, and if you calculate that movement, crude oil has moved $40,000 from that low to that high. That is impressive. On this other side, this is ATR. Not really looking at the extremes or the highest high and the lowest low, but it's looking at each bar and averaging how those bars are moving up and down. Still a significant amount. It's just telling you by this amount that it's moving about $9,000 every single day in average. And this is just one contract. There is a nice feature of this indicator that if you go to studies and you edit the study, you can change the trade size. So if I change the trade size to two contracts, of course, all the values are going to be doubled. So now you can see that for crude oil, I have an $18,000 average movement per day if I were trading two contracts of crude oil. Impressive, right? So then very handy, because now you can see what the movement translates into in a dollar amount. And not only that, let's go over here to, and there's more, like the commercial says, right? The bang for your buck. This is an indicator that is going to calculate what is the commodity, or what is the futures with the most volatility that my margin dollar can buy. Because one thing is, understanding how far these commodities are moving, but based on margin, which one is giving you the most bang for your buck? Again, we're going to measure this in two ways, same two ways that we did, the measurement, but this time we're taking into account the margin of each one of these commodities to see which one gives you the most, the highest ratio, if you want to call it that way. And the two indicators that we're going to be looking at here is bang for your buck and futures margin, so that we can, include it all together. Let's go back in here. I'm going to click on the plus here to add another study. This indicator is called bang for your buck. I'm going to add it, and it's going to look very similar to the one we just talked about, the channel and the ATR, because it's exactly the same calculation. What this indicator is doing, this indicator called bang for your buck, it's taking the dollar amount that is already calculated over here and dividing it by margin. Where do we see margin? Well, we can see margin right here in radar screen 2. I'm going to click on plus here, and that's why we reference two indicators on this last PowerPoint slide. I want to take a look at futures margin for RS, of course, radar screen. I'm going to add it, and I'm going to move it down right after bang for your buck. This gives me margin. There are some things here that I probably can hide if I wanted to. For example, here's contracts. There's always one all the way down. If you don't know this, this is an indicator that has 6 different columns, and you probably don't need all of them all the time. So if you want to reduce the number of columns, just right-click, go to Studies, Show Hide Plots, and you can hide certain things. For example, I'm going to hide contracts. The update, once I know it's been updated, I can hide that too. Studies, show hide, and hide the update. Maybe I don't want to see maintenance. So I'm going to right click studies, show hide, and go to maintenance. And the day rate, maybe I want to hide the percentage. I'm going to right click studies, show hide, and I'm going to hide the percentage. So I have the initial and the day trade rate. So what this is doing, this art of TradeStation bang for your buck, it's giving you what is the futures contract that has the most, that gives you the most bang for your buck. And the way that it's doing it is taking the dollar amount. Let's take the very top one as an example. This is a futures contract based on the Australian dollar. So it's a currency futures. And based on the channel, it has an $8,000 movement. And for the ATR, it moves about $1,700 in average per day. If we take a look at margin, the initial margin is $1,800. I'm not sure if you can tell, but I changed the size here. You guys remember? So for the dollar range, I changed it to 2. Let me go back here to studies and edit it again. I changed the trade size to 2 contracts. I'm going to click OK. And now it makes sense. Now, if you look at the initial margin is $1,800, that's how much dollar amount is required for you to put that position. So for the movement in the channel, which is $4,000, that means that that's a 225% of the initial margin. When you look at the ATR is $800, which represents just about 48% of the initial margin. So which commodity gives you the most bang for your buck? Well, you can sort by the channel, or you can sort by the ATR, depending on how you want to measure volatility. For every higher movement, you always have to look at both sides of the coin, the same way that it's giving you potential in the upward movement, which makes us all excited. It also gives you risk, and it can also go against you and make you lose money in the same potential, in the same strength. So we always have to look at both sides, because looking at volatility, sometimes we say, well, that's huge. I mean, that's great leverage, but at the same time, that same leverage can work against you and provide you risk. All right. I think that's all the indicators that I had for you guys. I provide again the promo that we're running here at TradeStation, which provides you 50% off futures brokerage fees. Again, if you are already a futures trader and you already have a futures account, talk to your account representative and ask him how you can take advantage of this promo. This is a forever promo, so it's something that we're running not only during the month of March, but I think it's also the month of April. Yes, it has a date of, you have to do it by April 30th. So that's the information that I had for you guys. I'm not sure if at the beginning I was a little bit too technical, but I as I said before, I wanted to give you guys all the information that you needed to make these indicators work and know how to customize them. I find them to be very useful when it comes to futures trading, especially this one right here in charting, which gives you a very good summary of all the details that you need to know about these commodities. Great. So we ran out of time. In fact, we went over about 7 minutes, and I apologize for that. I want to appreciate the time that you guys spent here with me. I want to invite you again to check out the content of the masterclass and also the Getting Started channels, and make sure that you speak to your account representative in regards to the futures promo. But guys, thank you so much for joining me today. And I hope that everyone here has a wonderful afternoon. And I hope to see you in a future event right here at TradeStation. Thank you guys for being here. Good night.